Hi, Segun Lawson here. I'm CEO and president of Thor Explorations, which is listed on the TSX-V and also listed on the AIM market of the London Stock Exchange. We're a West Africa focused gold company. We have our flagship project in Nigeria where we have the Segilola Gold mine, which we built over the last 2 years through the COVID pandemic. And we're now looking at our first year of production, hoping to produce about 100,000 ounces in our first calendar year. We also have an excellent advanced exploration project in Senegal, the Douta project, which we're advancing to preliminary feasibility study. And we have an early stage project in Burkina Faso.
Segun, good to see you again. We saw you recently on a panel, and but before that, I haven't seen much of this story. So sorry, actually. You said we hope to produce 100,000 ounces. Your Q2 numbers have come out. I hope it's a bit more than I hope.
Well, what can I say? Look, we initially had our guidance at 80,000 to 100,000. We narrowed it to 85 to 100. We've narrowed it a second time to 90 to 100. And every time we've put out guidance, we've been at the upper end of it. We see no reasons why we shouldn't be at the upper end of the 90 to 100,000 ounces. And that's our target. And we're confident enough to anticipate we will be around that 100,000 ounce mark.
Right. Okay. Look, why don't we kind of just quickly kind of run through the Q2 numbers, if you don't mind. But then I want to sort of almost reintroduce the story to people who may have heard it before, and certainly the people who have not heard it before, because 100,000 ounce a year producer in West Africa is something that everyone should be interested in. So if you don't mind, give me the headline numbers on Q2.
Yeah. So in Q2 we produced just under 24,000 ounces, 23,785 ounces. All-in sustaining costs came in under $1,000. So our all-in sustaining costs for the year, we still maintain between $850 and $950 per ounce. What was really impressive to us internally about Q2 is that we have made improvements in a number of aspects quarter upon quarter. So not just in output, in grade, in throughput rate, in recovery rate. And the plant is running very well. We're very happy with how it runs. We have a very strong stockpile, and we went into Q3 with an excellent start, and we expect to be at the upper end of our guidance for Q3 as well.
Right. Okay. Thanks for that. Let's just talk about the start of this company. Okay. It was a sticky start, right? Nigeria doesn't do gold at high volumes. Getting financing in that kind of given that kind of backdrop is hard. The money that you raised was potentially, arguably, expensive money, and you're going to have to refinance that out at some point. And of course, you're doing this all during COVID, supply chain issues, rising energy costs. It's been a tough period, hasn't it?
It's been a tough period globally for all our peer groups. But what I can say is, we managed to build this project largely on time and within budget. We've managed to mitigate supply chain issues by stocking well in advance. In May, we changed our energy source from diesel to compressed natural gas, which has absorbed a lot of the price rise shocks. And like you say, we are the first large-scale commercial gold mine in Nigeria. It's obviously a jurisdiction known for its oil and gas, which means it has been a bit of a learning experience for us and for the country, and ultimately for also our financing experience. No one's ever financed a project of this scale in gold in Nigeria before. And we've got a great project in terms of the grade. It's the open pit reserve grade is just over 4 grams per ton, which has meant we've been able to generate a lot of cash at very strong margins as well. So we've managed to absorb the shocks. We've managed to operate through despite all what's been thrown at us. And look, we're very well positioned this year to produce as per guidance.
Yeah, but you're producing cash, but you're paying it straight back down. It's almost like the financing that you put in place was almost punitive in a way, in the sense it's very, very front loaded. Was that just the Nigeria factor, or was this the factor of the fact that you guys are sort of new to the businesses where it didn't have that track record, and how do you get yourself out of it?
Well, it's probably a number of factors. We weren't spoiled for choice when we came to financing, but we have an excellent financing partner, the Africa Finance Corporation. Strategically, they're a very good match for us. They didn't just put in the debt; they became our largest shareholder as well, and they put in the stream. So a total funding package for a first of its kind project of $86.5 million. However, like you rightly say, the financing was sculpted. It's front end loaded. By the end of this year, we'd have paid back about half of the $54.5 million senior debt component. And after that, the repayments are pretty low for 6 quarters, about $1 million per quarter. And then a couple of bullet repayments at the end. However, like you say, it's not something we have to refinance. At this rate, we would have paid the full loan back sometime in Q3 next year or end of Q2 next year. However, should we choose to amortize the debt, something more flexible, better suited to a company that's generating cash flow rather than a project finance structure that was initially put in place, it's something that I think would probably be welcomed by the market as well. So we keep all our options open. We haven't decided on any at the moment, but yeah, we keep them all open.
Okay, so you say the market may welcome that, and I think it would or should. What else is the market marking you down on? Because if I look at, obviously, everyone's had a tricky ride of late, precious metals especially. But you've been kind of moving sideways, if not slightly down, despite now being a producer, despite now, as you say, with reasonable margins as well. It has to be said. What else are they looking at you and going, do you know what? I'm not sure about these guys. I'm going to be looking elsewhere, or do you think it's risk off for everyone, and you're no different from the rest of the producers out there?
I think it's a combination. Yeah, I think it's a combination of factors, but I think painfully, when we were building a mine and hadn't generated $1 of cash, we were valued a lot more than now we're generating operating cash of north of $8 million a month. And yeah, there are a number of reasons for that. Maybe the sector as a whole is struggling. All our peers are struggling. However, I think I think there are a number of things we can look at closely. It's a first of its kind project in Nigeria. It's never been done before. People don't invest where they don't know. So, giving investors that comfort that it can be done, and hopefully we're generating that track record. We've built this mine on time. We've built it on budget. We had a couple of hitches after our initial commercial production announcement in Q4 last year. We've since had 9 months of very strong production, and hopefully that continues through to the end of the year. And I think another key point, which a lot of investors, particularly retail investors, in fact, all investors, institutional investors as well, they look at the short mine life. We only have a 5-year mine life. And that really wasn't a function of us running out of gold. It was really a function of us raising painful dilutive equity and drawing a line in the sand when we did, with leaving the door open to come back when we were generating cash and implement more exploration. So we're just doing that now. We constantly have drills turning close to the mine, within trucking distance of the mine as well. Underneath the mine, there's an underground component. And we're quietly confident that we will extend this mine life, certainly within the next 6 to 12 months, and that's a constant process that goes on in parallel with mining.
Right. So I don't think there's anything wrong with a short mine life, as long as you show a road to increasing the resource and reserves there. I mean, Rox Gold successfully did that next door to you, but what are you going to allocate in terms of budget for that? Because I say this front loading of this debt component ties your hands a little bit. You are throwing off a bit of cash on a monthly basis, but it's all. I mean, what are you left with here? I think this quarter you talked about $6 million, but what does that growth profile look like in terms of the free cash flow?
Yeah, like I say, after September, then we start building up a lot of cash, and should we refinance, for example, if we did refinance, then we'd have a much larger amounts of cash readily available for exploration. We do have an exploration budget at the moment for this year, which is just over $5 million. It's not where we want to be. We think we could, if we really want to hit this hard, we throw a lot more at it and have probably twice the number of rigs going. But our priority right now is getting the bulk of the debt repaid. We don't see why we would have any issues doing that. And then come 1st of October, we're in a very good position to look at all our options.
It's kind of an interesting one, isn't it? Like I've seen different companies with different models when it comes to debt repayment or wanting to be debt free, and other people saying, well, actually, debt's a good thing. There needs to be some debt on the books here at the moment. So you're not too far away from having to make that decision or being able to make that decision. Are there already offers on the table with regards to debt refinance, or was that yet to be decided?
It's yet to be decided.
Okay. Interesting.
But we've kept our options open, but that's not. There's nothing firm, and we haven't formally gone out.
But where's your head at? Do you prefer to be like debt free and sort of in control? Would you think? Do you agree with the sentiment that actually a little bit of debt on the books is actually a good thing?
Like you say, it's not a bad thing to have debt on the books, but however, our project financing, or should I say, our debt was really suited to a project finance style structure, belts and braces, front loaded. Now we've demonstrated we're an operating company, and we're running smoothly. I think, there are certain advantages to restructuring that into a more corporate style facility. So no decisions have been made yet, but all our options are open. And I think it'll be certainly a win-win for us, regardless of what we do, because we have low scheduled repayments, which are slightly more restrictive, or if we do go down the avenue of restructuring or refinancing, then there's a lot more cash flow to throw around.
Right. Okay. So you've allocated $5 million for the exploration bit. What are you looking to do? Are you looking for like true exploration? Or are you doing kind of the kind of small step as infill drilling? Any kind of combination to kind of increase that 5 year to whatever it is that you're targeting? Because institutions like to see minimum 10 years, make them feel comfortable. And if you, given where your market cap is, you're going to soon want to kind of increase the size of the institutional investors on your register, I suspect. So what's the plan? Is there a model laid out yet, or is that yet to be decided?
No. There's an ongoing plan. We have, and it's divided into three. The first is near mine exploration, where we constantly have target generation for drilling. And that's everything within a 2 kilometer radius. Looking at from stream sampling to soil sampling, and then once we have a drill target we're confident with, we start drilling. So we've been drilling within 2-3 kilometers of the mine at a number of targets. We do have what we call a regional exploration program, which is within tracking distance of the plant, but slightly further away than the near mine, so up to 20 kilometers away. And we have prioritized a list of targets there that we're drilling, and we have assays pending as well. And then thirdly, once the rainy season finishes, like I say, we haven't closed out this resource. I mean, our deepest drill holes intersected very high grades and currently underneath the pit that aren't being brought into the reserve. So there's no economic allocation to that at the moment. So one of the third aspect of our exploration is filling in, doing some infill, filling in that deeper drill program. We have done a preliminary economic assessment on a portion of the underground, now extending that, doing some more drilling and scaling up what we have underground and chasing these high grade sheets at depth.
You've done quite a good job in Nigeria in terms of remunerating some of the people who are on your property, which is good. And you've, in fact, have you actually built a whole kind of complex there for the workers on the site? I noticed. Well, certainly some glowing image of. Is that finished?
Yeah. Look, all our workers work on site, and then majority of our staff actually from the 3 communities around us. So most of them live within the exploration license area, and then the people that don't come from there live on site as well. We haven't had to physically relocate people. The resettlement we've done has been economic. People losing their livelihood in terms of destroying of crops. So we have livelihood restoration programs as well, and economic compensation for the land. We've paid out a significant amount of money to date, and that's ongoing. And we've made a commitment to continue to upskill people to carry out livelihood restoration programs, so alternatives to the subsistence farming they were doing before. We have a number of projects that have been earmarked for them, which is a cooperative. We set them up, but they take over, and then they take the profits from that as well.
Yeah, it's interesting. All the big talk about ESG last year, I think some companies sort of did it better than others, and it's been interesting to sort of see the kind of the pushback this year in from mining investors on the ESG topic, and even the SEC in pushing back on some of the funds who perhaps have set themselves up as ESG focused, not actually delivering. So it's nice to see something like this actually working on the ground. Right. So that's Nigeria. I want to kind of park that up. You also mentioned Duta in Senegal, and also you've got kind of the Central Hyundai project. Duta seems to be the one that you went to first of all. I mean, what's happening there? And I'm sort of interested in terms of how you build up value there, because they're slightly later stage projects. So where are you in Senegal at the moment?
To summarize, we're hugely excited by Dita. It's an advanced exploration program in a known gold mineralized system, in a known gold jurisdiction, that has over the last few years consistently delivered good results for us. We had our first major milestone last year, which was a maiden resource, 730,000 ounces, grading at 1.5 grams per ton. And we had a 2-phase drilling program this year. One was to see if we could extend our main deposit, Makosa, and the second phase was to infill that at the high grades and also chase it at depth. We're currently in the second half of the second phase, if that makes sense. So we're looking at drilling about 25,000 meters in total. So hopefully by the end of October, that should all be done. And all this data is going to feed into our PFS. So we're doing our MET studies, our geotech, our hydro, our environmental studies. And, unlike a lot of our peers, single mine producers who go out to acquire a second project, we're hoping we can build our second project organically. We have the mine building experience and team, we have the EPC partners, and we have the very recent, experience. So it's something we're very excited about. The rest of the year should be, from a market perspective, the rest of the year should see consistent drill results being released into the market from Dita.
Right. So you're just back to DFS. Remind me about the PEA numbers on that one, because it's more advanced than I realized.
Oh no, we didn't do a PEA. So we did a maiden resource, and we were initially going to do a PEA, but the amount of work we're committing to doing now, we think we can leapfrog a PEA and go straight to PFS.
Okay. Well, that's a kind of confident move. I mean, there's a maiden resource on it already of what?
Of 730,000 ounces, grading at 1.5 grams per ton. Inferred. And that was the same move we did in Nigeria. When we started doing our PEA, we realized we could drill our met holes, we could do our geotech, do our studies, and go straight to PFS, and we did that.
And the beauty here being that you can fund this yourself, can you? It's a different ball game, but okay. Well, that's extraordinary and interesting as well. And what about Burkina Faso? Is that
so? Burkina Faso is a lot earlier stage than the other two projects. It's closer to grassroots. We were in a joint venture, so we hadn't really budgeted anything for it for a number of years. We had funding obligations with our joint venture partner, which was Acacia. They got taken over by Barrick, but we got back 100% of the project when Barrick sold its non-core assets in Africa in exchange for 1% NSR. So in Burkina Faso, we haven't fully decided what we're going to do there. Our real focus is Nigeria and Senegal. It gives us optionality, whether to deploy cash there or to do something strategic on the right commercial terms. But we believe we'll probably make a decision before the end of this year.
And had Acacia actually done much work? Is there much data to be able to kind of build a case and maybe flip it out to someone, or as you say, find another partner?
There's a lot of data. They put in quite a few meters into the ground. They hit a few sniffs. No real known system, or should I say, maiden resource. But there's definitely gold mineralization. There's definitely structural interpretations, and something to build on from there. Certainly.
Right. Okay. Well, look. Just in terms of your time, I know that you're going to be heading off towards the US shortly to have conversations over there. You've been invited to a big conference. So, what are you hoping to get out of that?
I'm hoping to get the word out, to let people know there's a cash generative project in West Africa producing 100,000 ounces, hopefully this year, at a very good margin, with strong growth potential, diversified by jurisdiction, diversified by stage of development in terms of projects, and has been completely under the radar for the last 5 years. So it's just about getting the word out now.
Right, but you're there talking to what? So obviously, there's a big sort of institutional gathering.
Yeah, it's a big spectrum of investors, institutional, retail, and a whole group of investors that I wouldn't ordinarily see in this part of the world as well. So very much looking forward to it.
Good. Well, look, so good to see you. Thanks for coming on the show and giving up your time to update us. I appreciate that. Nigeria seems to be moving along quite nicely indeed, and now we understand a lot of the moving parts. And I hope you feel that you got a chance to explain why you built it like you did. I guess it was out of necessity rather than design, as it were.
Certainly, I'm someone who hasn't got a 20, 30-year track record in the mining sector. This is a project and a sector I've been hugely passionate about. I studied geology at university, started this company 12 years ago, and I've seen it evolve from, walking around remote Nigeria in a pair of trainers to the mine that it is now. So we've had to be pretty unconventional. We've got to the production stage last year, and we've been producing now. And now it's time we think we have an excellent platform, generating strong cash and with growth potential to take it to the next level.
Segun, I think you've done a great job. I'm glad you came on the show. Hopefully we'll see more of you soon.
Thank you very much.
Thanks.